Hi, this is Jeff Scott, and welcome to this weekend's review. 8/24/2014. It is about 9 p.m. and futures were up a teeny bit. At least the futures that are out. I think there were some technical problems at Globex and CME. In fact, showing that they won't open to 9 o'clock Central Time. So those are probably old futures. I titled today, Another Strong Week Ends at Resistance, and it was a strong week. And the question for me is whether we got a breakout to new highs or a pause to refresh. Jeffrey at highgrowthstockdoc.com. A shorter one is hgsidoc@gmail.com. Disclaimer, as always, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker, and I am not financially affiliated with any software vendor or trading company. Tools demonstrate those that I use in my daily trading, and I have paid for everything that I demonstrate. I rely on the teachings of others. I may have been a drug developer when I was a cancer doc, but when it comes to trading, I try and learn from the people that know much more than me, whether it's Ian Woodward and Ron Brown from Woodward and Brown Investing, sort of the heart of HGSI from an investment philosophy, whether it's CanSlim and other goodies from William O'Neill and the disciples Morales and Catcher, who took O'Neill's CanSlim and added us pocket pivots, Bible gap ups, and took it to the current century. Alexander Elder and Carrie sitting here. These are Alexander's books, great reading. John Person, longtime trader, future trader, stock trader, great ideas. A lot of the things that we like to use with sector rotation, top-down investing, and seasonality, and he's got some innovative buy and sell indicators. Others on here that I like to point out, Bigelow's my candlestick guy, George Lee, friend of mine, learn a lot from him, love comparing notes with him, and then several others that you likely have heard about. I have a lot of programs on my computer. Of course, I tell my wife that I need every one of them. But in reality, if she wasn't listening, I would say I just really need a trading platform of which I can use either TradeStation or Thinkorswim. But frankly, from a real-time platform, I think you get a lot more out of Genesis. And then from analytics, I use HGSI, EdgeRater. I'm a big fan of seasonality. EdgeRater is really pushing in as perhaps my leading tool that I use, but I'm still a big fan of Magenta and Best Choice. And I use MarketSmith for additional fundamental data and a different source for screening and charting. I always ask myself, where are we? And I think we've moved to the left. Last weekend, I thought we were probably going to take another leg up, and we did. And I think we're just waiting to this point where we top. And as John Person has taught me over the years, it takes a lot longer for a market to top than to bottom. It's important, however, in my mind, to know where we are, because it might have to do a little bit with how I decide to play the market. In my mind, I'm still going to play this market to the long side, but I'm getting cautious again, mostly because we're getting to resistance. We've had a nice run over the last week or so. And I'll show you some of the charts that support my concern about resistance. Speaking of charts, one of the things that I can do in HGSI is create surrogate indexes. And then I use these surrogates to give me a sense of what the market is doing. And if these roll over or take off, they're often act earlier than the market as a whole. The first surrogate that we look at is the canaries. And you can see it's Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix. It's something that I got, and we all got from Ian Woodward well over a year ago. And you could see the canaries had a nice run up until March of this year when they rolled over. Well, lo and behold, the canary has arisen from the ashes, like that. And you could see that the canary index is pretty much about to take out the prior high. This is on a dollar weighted or equal dollar index rather. You can see multiple pocket pivots came into this index over the weekend. All my technicals have turned green. About the only thing that hasn't fired yet is it had a PSAR reversal to the downside on Friday, which is kind of hard for me to understand, to be honest. I guess during the day it must have hit the PSAR underneath and flipped. I would say these are strong. No evidence of a market rollover here. The LLURs, these are a list of stocks that were chosen by the HGSI attendees at the Palos Verdes meeting in March. And we came up with about 25, 30 stocks. Hard to read them here. But these were tight leaders in the market when we chose them in March, right around the time we had the spinning top. They quickly rolled over, but they've now retaken the 50. And lastly, my Florida Summit in June, we picked the best stocks in the market at that time. You might be able to read them, heavily influenced by energy. And despite the fact that energy is taking its time to come back up after a recent pullback, and as my mother-in-law noted in the car tonight, gas has come down a lot, which is sort of strange because she doesn't drive anymore, how she even knew that. But gas has come down, and it's because oil has sold off. Now, you could see the Florida Summit LLURs are at new highs. They've been there stalling for the last 3 days. So I gave them the benefit of the doubt and said pausing to refresh at new highs, multiple pocket pivots this week. Again, is this going to be sort of the land of a quadruple top, or have they actually broken above it? I think they've broken above it, and hopefully they will continue their march. So my themes, the bull case. The market is methodically moving higher despite continued geopolitical worries. Ukraine clash with Russia, ISIS, Israel. Yeah, I know Friday was not a great day, but consider that Friday occurred while from the Russian territory, the Russians were launching artillery shells into Ukraine. You go back to earlier market sell-offs, I think that would have been enough. Now, granted, the Dow was down less than a point or so, or I'm sorry, about 38 points, less than 40 points. S&P was up a tad. NASDAQ was up a little bit more. ISIS, nothing scares me more than ISIS. In fact, all I had to do is watch TV Sunday morning today and hear about why I should be scared of ISIS. And then Israel and Hamas, they're not done yet. Despite all of that, market goes higher. How about Jackson Hole? That was the big news this week at the end. Well, Janet still dovish, and the Fed bears, even though they're talking raises, they're talking spring, summer 2015. That's almost another year. Summer rally clearly is in place, and when you think of what makes markets roll over, it's the opposite of what makes them rise. We're in the setting of rising earnings, subdued inflation, and low and not currently yet rising interest rates. And as long as those three tenets stay there, we're going to get corrections. That's the name of the game. But it's hard for me to believe we're going to get a major market rollover. Granted, the market's a discounting entity, and I suspect those summer, spring rising interest rates might show themselves in February and March before they actually occur by the market getting some headwinds. Bear case, end of the summer. It's just been amateur hour the last 3 months. Big guys are coming back from the Hamptons. Will they add to the bull or will they take it down? I've commented each week that the dollar is getting stronger. You know, if we're tightening because we're recovering, if we believe we're recovering, and the EU is loosening because they're not recovering, our dollar is going to go up strong. What's the impact of a rising US dollar? Clearly, gold and oil will drop. Now, the interesting question will be what happens to US manufactured goods. In a strong dollar, they become more expensive elsewhere. Our imports become cheaper. And typically the stock market finds headwinds, or parts of the stock market headwinds, if the dollar rises too much too fast. We're in the second year of presidential cycle. Ian talks about that all the time. That's a high risk environment. Doesn't have to be a pullback, but that could be a bear argument. And clearly we are overdue a larger correction. This week, as always, I'll trade the market that we have, not what we think we should have. As I write, I'm still biased to the long side with a short leash. I am concerned about news, and I'll show you the resistance of the S&P 500. I did buy some insurance on Friday. I like not using my insurance because I can get rid of it on Tuesday for a small loss. And I've been doing now a lot of OEX vertical spreads where I'm selling a in the money OEX put and buying an in the money and selling an out of the money, and with multiple strike prices, and just to play quick whipsaws to the downside. Bottoms up review. I looked at a lot of charts. Big Bio still looks attractive. Merger mania continues. I'm going to be a happy guy tomorrow because I have a fairly substantial position in Intermune, which is being bought by Roche, announced today at I think 8.3 billion. Banks and financial look strong. Are they being propelled perhaps by the Bank of America settlement? Interest-sensitive stocks still in vogue. Some utilities, but lots of REITs and MLPs made by screens. A lot of technology stocks look good. Transports seem to be coming back up, and China remains strong. Just to review future meetings, John Person has a seminar October 12th and 13th in Singer Island, Florida. His cost of admission includes one night stay at a great resort, which is my neighbor here on Singer Island on the beach. It's worth bringing your spouse or significant other or friend. For those of you who follow me that attend that meeting, I'm going to offer a inexpensive prequel one-day summit just to cover my cost on the Saturday. John's meeting is Sunday and Monday. I will also be speaking for an hour or two on John's summit, but that's really his meeting. And the only reason I'm holding the meeting on Saturday is because I had a couple of people ask me if I would. October 3rd through 5th, out in Orange County, George Lee's having an advanced seminar. Him, Sue, the MACD guru will be there as well. Strongly consider the PV meeting October 20 to 22nd with Ron and Ian. I know Gil Morales, many of you are fans of his, will be speaking at that meeting. I will not be there for the first time in a decade, as I'll be in Australia. And I am tentatively planning a second summit with George Lee down here in February in Singer Island. This is last week's picture, but I looked a month out, and I noted that from a seasonality, home builders, retail, China, biotech, insurance, and REITs look good. They still look good. And you'll notice that several of those are leading the market. Let me make a comment about retail. I should have mentioned that on the prior sheet. So I want to put this in because I want to really emphasize this was a mistake not to have it. Retail is hot right now. It's not necessarily great earnings per share growth, but I'll look at a couple tonight. But boy, are they all over the place. And I bought American Eagle Outfitters on Monday last week because of what I saw in my review. Gap looks great. TJ Maxx is popping. Ross stores are popping. So a lot of things going on in retail, which shouldn't be a surprise to me because according to the seasonality a month from last week, retail was up 7 out of 8 years for an average of 6% over the 1 month period of time. From a data perspective, on the 25th, new home sales, durable good. On the 26th, Schiller and housing numbers, mortgage index, etc. 27th, crude inventories. 28th, claims, continuing claims, GDP and deflator. Probably will not be market moving. People expect, unless there's a big movement away from 4%. For the second estimate on the Q2 GDP. Michigan sentiment on the 29th. As you can see here, earnings are dwindling down. Qihu Kind of looks interesting from a buy right now, but I won't touch it till after earnings, which is fine because it opens Monday. Couldn't do it anyways. A lot of retail this week. Here's DSW. I think Abercrombie and Finch is this. We've got Pacific Sun. You can see here. So you need to know where your, when I was growing up, there used to be a show at 11 o'clock and it'd say, do you know where your parents are? I think it was sort of playing on, do you know where your children are? I think you need to know when your earnings are if you want to win in this game. All right, so pointed to the bullish side, but willing to change on a dime if I need to, is where I'm sitting right now. Yeah, I changed off the Ferrari. This week I bought a couple of Porsches. This is a 911 Carrera Turbo S. I also bought a Panamera Executive Turbo. I'm going to put on the license plates ICPT. As it ran the last couple weeks ago from 240 to 360 plus. I don't know how high it went, but that's when I took my profits. All right, let's take a look at Microsoft and let's look at Excel in the end of the week. So I mentioned that it was a good week. So this is using, here's a group performance analysis in HGSI, looking at end of day Friday to Friday, 1 week's period of time. I've started by putting the major markets in here just to get a feel of the market for the week. It was a good week. Most of the indexes are up. You want volatility down. The dollar was up a little bit, not much, only 1.11%. Semiconductors up at the top. The Dow Industrials, transports, all doing very well. The S&P was up 1.71%. The NASDAQ about the same, as was the Russell. So my benchmark performance is going to be about 1.6% for the week. Now, as I look at the various groups that I look at, one can see lots of black and just a little red. So the majority of indexes that I follow and groups that I draw my stocks from were positive. Now, interestingly, things like Best of Woodward and Brown down here, let me highlight that in gray. That one actually was flat, 50-50 of the top 10 stocks in Woodward and Brown. Now, I see this a lot where some of the big leaders of the prior Friday, these are stocks had Force, Kahuna, Mobile Breakouts, Pocket Pivot, Bible, Gap Ups. They don't necessarily do well the next couple of days. Here's M&K Bible Gap Ups. Doesn't mean that they don't do well over the next period of time. So not surprising to see that Woody stocks actually were down here at the lower level of the week. And again, after a big run, it's not that unusual to see a pause to refresh. What was winning? This is a meta stock search. Actually, both of these long bullish pullbacks, long bullish coiled springs. They don't find a lot of stocks, but they were both very bullish. Earnings acceleration was good. Shadow stocks were up 3.36%. Top Vector Vest by VST were up 3.27. EM Point Score 2.84. This is interesting. Stocks and groups to the upside and downside performed the same. My GIF All-Stars, which is a great measurement. I do this most weeks. I do it every night for myself. We're up 2.6%. Again, the S&P was up 1.7, equal for the HGS 100. IBD 50 was up 2.03. Had I held my positions, I would have been up 1.84% just based upon equal dollar value, which is sort of stupid because that doesn't really reflect anything. But it gives me an idea that my stocks were at least performing at market or higher. The stocks that I was looking at buying last week were up 2.42%. That to me is a more indicative of whether what I like to do works or not, and it's working. I can also look from, which I'm not going to, but I'm just pointing out, from Monday to Monday. I don't have to do from Friday to Friday. Hindenburg signs of market concern. No big correction last 50 years without having at least one Hindenburg. Not all Hindenburgs are meaningful, probably 1 in 4. I saw recently that the guy that developed the Hindenburg recently died. He was actually not an old guy at all. Bottom line here is you need to have evidence of new highs and new lows over 2.2%, rising moving average of the NYSE, McClellan less than 0. New highs cannot be more than 2 times new lows. If you get all those elements, you get a Hindi, and we don't have enough new lows at 0.34% to be anywhere close. No Hindis, that's a good sign. One of my favorite things that I like to look at is what I call Bucketology. So let's just focus on the top one right now. And what this does is it takes all the stocks in the S&P 1500, and then it sort of ranks them on what decile they are within the Bollinger Bands. So decile means 10, and then you add 1 band if you're below and 1 band if you're above. And I can watch the ebb and flow of the market just by running this in EdgeRater. And this has become my go-to tool for buying and sell signals. So here's where we closed on Friday. It's very bullish appearing and not at a point where we have to go the other way. You notice that only about 6% of stocks are trading above the Bollinger Bands, 80% of the stocks above midline. Here's what hot looks like. 30% of stocks trading above the Bollinger Bands. This was a high back in June. 18% of stocks trading above the Bollinger Bands. This was a high of the market in July. Here's what cold looks like. 30% of stocks below the lower Bollinger Bands. This was an April 11th low. I like to say that I put the same one in here twice. Darn it. Let me show you how I generate these. And I'm going to fix, I don't like, I can't do it because I'm using Snagit to record this. Suffice it to say that there is another one July 3rd, and I know that because I ran it earlier, but just to show you, I get my S&P composite here. I go to HGSI Woodward and Brown. I find the percent buckets report, and I hit run, have a drink of my coffee, and it's running the analysis. And it should give me a date for tomorrow, yesterday. And I can tell you that it was there he is, 8-1. 731, 8-1, pick 'em. This is when I knew the market was reversing, and we talked about it on a previous call. 35% of stocks trading below their Bollinger Band. If 90 to 95% of the time, a stock is going to live within its bands. If I've got 35% of the market trading above or below their bands, you know there's a reversion to mean coming. So here's what I really like to show you. Can't read it, but suffice it to say, during this bull market run, every time we got to this level of oversold, the market bounced. Now this one, it bounced for a couple of days and sold off harder before it ultimately found its footing about 4 trading days later. So when I see this signal in a bull market, I know it's time to jump back in, that the market correction is over. The corollary in a bull market is not as powerful, because we'll see every time we saw it either pull back or go sideways, but it doesn't have the same ramifications. Now, in a bear market, you might find that when you get this overbought, it's more meaningful. I look at the markets in the Woody indicator, and for those that don't really know the Woody indicator, he looks at percent B times B, and I'm not going to go into a long dissertation. This, where my pointer is the columns that matter, and we have a number of major indexes here, and we look at the Woody indicator. Green is a buy, red is a sell, yellow is chop. And what we're looking for are periods of sustained green that tell us that we could be long in the market, or periods of sustained red. What we hate to see is this chop, where you don't know if you're long or short, and it seems to change on a daily basis. This was from a year ago today, or Friday, August 22nd, until February 21st. Now, if I move over, I can show you from February 24th, which was the next trading day, to today. You can see these periods of long trading opportunities. Here, some tough sledding in the market. And now we're back into all green. So this was a very choppy market that has really gone on since March, had a little bit of a run to the bulls in May, but really until for about 5 months, we had this chop without sustained trending, perhaps one way or the other. And we're all green here, which to me is a buy. It'd be interesting to see. Now, I have a lot of signals that I can run in EdgeRater, whether they're George Lee signals, looking at finding stocks in a squeeze and looking for breakouts or breakdowns. I can look at that on a daily or weekly basis. Here's my American Eagle Outfitters. I'm sure we'll take a look at that shortly, and you'll see why I liked it. We can look at Morales and Catcher signals, code blue and code red, where the best stocks on the code blue and the best stocks to short on the code red might come to the top. If you're a fan of, and I can't spell John Person, but his pivot analysis, here's 2 outstanding books. Again, I have the privilege of sharing the stage with John at an upcoming meeting, and I've been able to create my own, and I emphasize my own because it's not commercially available at this time, spreadsheet, where I can scan the market looking for his favorite signals, trying to identify stocks that I might want to go long in. One of the things that I like to do in EdgeRater is to look at historical performance now, where I could look at stocks and their anticipated performance over the next 2 weeks, 1 month, 2 months, 3 months. I could also run by month what to expect. But I care about right now. And I care about what's going to happen in the next 1 month. So this, of the things that I've highlighted, and there's no guarantees with seasonality. You could see that each of these, whoops, let me redo that. Each of these have been up 11 out of the 12 years over the next 4 weeks. That means something to me. Well, Intermune will be up huge tomorrow, so that'll be 12 out of 13. But if I don't have a lot of time, I might want to concentrate just on these stocks. Look at Pharmacyclics, up 19% average over the next 4 weeks, up 11 out of 12 years. Nike, up 5% over the next 1 month, up 11 out of 12 years. MGM, up 11 out of 12 years, an average of 8%. CME Group, up 11 out of 12 years, average of 8%. If you believe in Santa Claus, fairy godmothers, and the Easter Bunny, then you believe in seasonality, and those are pretty strong seasonal clues. And then from a seasonality on the ETFs, I look at 1 month out, and I look at performance, and then the likelihood, and there's my retail up 4% as a spider over the next 1 month. 7 out of 8 positive years. Home builders and biotechs up 6 out of 8, 7 out of 8 on retail, whatever I said, and gold up a little bit, 6 out of 9 years. So I use a lot of these tools to help me understand. I also like to look at market rotation by seeing which ETFs are really leading the market going forward. And I can't say I got a lot out of this report today, but clearly biotech, this is a strong season. Over the next 4 weeks, it's been up 10 out of 1 month, 10 out of 13 years. So enough of that. Then I want to jump into my Excel, continuing on the same analysis that I do on a regular basis. And I'm going to go into Excel, and I'm going to very quickly look at my elder indicators. Here's the NASDAQ. Okay, so what do I see here? I see spinning top, blue candle. I can certainly go long or short or hold based upon that blue candle. Green, and I think that's green, so I'd be leaning towards the long or hold and not wanting to sell short here. But notice that red dot, red dot, red dot. That's concerning about MACD divergence on the weekly as well. So I look at the NASDAQ clearly in an uptrend, new multi-year highs, correction highs. Looks like it's pausing, some divergence, but I wouldn't necessarily short this the way it looks right now. The Dow, what a run. Pull back here and almost a straight line up over the last 2 weeks. Green, green, and blue. Now you notice what happens after those red dots. After MACD divergence is a sign of perhaps underlying weakness in the market, and you could see pretty robust sell-offs occurred. But green, green, and blue, buying window clearly open. I would not be shorting Dow stocks, although I might be, a little bit nervous up this high. But I can tell you in the past, in strong bull runs, stocks just ride up and the indexes ride up their upper bands. So Dow looks strong. What about Russell? Looking at the TF, the Russell futures. Blue, I guess blue, green and blue. You could see the MACD divergences led to a sell-off. I pay attention to those dots, but I also recognize that they had a lot of dots before the market sold off. I think Russell stocks don't look as strong, perhaps, but they've had a nice move up. Buying window can be open, selling windows open with the blue candles as well, or hold. SOX had a great week. You could see it here. Spinning top up at the top, green, green, blue. I'm a little bit nervous here that that's not a good candlestick. If it opens down, we might see a sell-off, yet the color is green, so I'm not bailing out yet on the SOX. S&P 500 futures, hanging man up here, but big run up like the Dow. You can see the red dots here are gone for now. Buying window on the S&P certainly open, would not be shorting there. S&P 100, blue, green, green. Why did I do a vertical debit bear spread or put spread? Why do I buy health insurance and life insurance? I hope I never use them, but I was a little bit stretched out there to the long side, and just in case the market blew up over the weekend, I wanted some protection. I don't mind taking a little loss on these. I mind wiping out my portfolio, so I typically take insurance when I think we're getting up near a top. Let's go take a look at the market within HGSI. So let's open up the warehouse view. Now, I dummied down my resolution for this program, for my webinars. So first time I may have to change the size of each thing. Of course, then I have to do it back again later. All right. T1 top-down analysis view, major markets plus in the Woodward and Brown folder. Ranked by raw combo, strength, mid caps, NASDAQ, small caps, Russell up here, weakness, oil volatility, commodities, silver, Utes, gold. Not a big shocker based on what we just saw. If we look at one-day performance, treasuries, gold, and dollar, kind of funny to see gold and dollar going up together. Perhaps some of that was related to concern about what was going on in Ukraine. Volatility, however, sold off 2.5%. Over 5 days, semis were up the most at 2.5%. We already looked at these before. I'm not going to spend much time except to highlight volatility, which was down 12.8%. Gold and silver both down as well. Dollar was up, as we've seen for 5 days, 1.1%. Let's look at a couple of my favorite indexes before we go into the industry analysis. Well, that's strange. It actually opened up to the right side. So I don't see any phoenixes or eurekas here. So let me go into something that's cleaner. And you know, I was concerned. This is the S&P 500, and the resistance that I'm concerned about, it's not a big problem necessarily, is we are right up at prior high, and you could see we had a little bit of a down day. According to this chart, we were down 3.97. So I think I'm looking at futures before. Oh, I was looking at NASDAQ. Yeah, S&P was down 3.97 or whatever on Friday. But we are at a previous high. We failed at it on Friday, and that may be short-term resistance. I don't expect that to be a lot of resistance, and my hope will be that we can continue up. One would think that 2000 is a no-brainer, but we'll see. So S&P at a little bit of resistance at prior highs, needs to break through and stay there. But you can see 8's above the 50, above the 200. Like to see at 17, get back above the 50 as well. That's the S&P 500. Russell 2000, as you can see, doesn't look quite as good. It's nowhere near prior highs, sort of in this trading range, and it's right in the middle with a spinning, with a doji right on the 50-day moving average. So it could go either way. Look at the NASDAQ, the strongest. As you can see, multi-year highs with a doji on the close on a low volume day. And the 17 is above the 50, which is above the 200. And if we look at smaller stocks, the Russell 2000 looks a lot like the Dow. Yeah, I guess I looked at the Russell already. The Russell 2000 right at its 50-day moving average. From the other things that we care about, volatility, VIX traded down. We make money on a falling VIX. That's why it's been good to be long the last 10 days. The dollar, as I mentioned, is something that I'm concerned about because historically a strong dollar has not always been good for stocks. And you can see our dollar is really breaking out. If this was a stock of yours, it's probably called LinkedIn. Same picture, but this is something that's very bullish right now. And you know, for so long, the dollar had difficulty getting above the 50. Excuse me, the 200. The 200 broke above it and now is in a big move. If I look at silver and gold, they're going to suffer because the dollar. You can see silver is down, getting close to its June lows, and gold has broken now below the 200-day moving average. So again, I look at the markets, and I started with the S&P 500 at resistance from prior high. I don't expect that to be huge resistance. I think 2000 is a no-brainer. 2000 gets us to where we closed at 1988. That's only 12.91%. So I think 2000 is a no-brainer. It'll be interesting to see if we can hold that, or if that's also the place that people are going to hit their sell buttons. It was the small caps. in the Russell 2000 that look exactly the same. No surprise there. All right, next thing I do is I go and I look at sector rotation or industry rotation, go down to 05, which is industry groups. I see we have 200 groups, and the T1 looks at multiple weeks, although it's heavily weighted on the last couple of days. But let's just look at 2-day force up and down. 2-day force up, a major industry index I skipped because that's an index of indexes. So leading group is semiconductor devices. I said technology looked good. Let's go through a couple of these very quickly. Don't know much about Peregrine. Don't like its earnings per share. When you see something like this, up 50%, takeout or huge earnings. So the more info from Web, go to FinViz. And what do I see? All right. Sometimes, we try that again. Let me close this. Right click, more info from Web. My pop-up blocker sometimes blocks this from occurring. All right. FinViz, let's go to FinViz and look at PSMI. While we're here, we'll take a look at our futures. So 3.26 on the NASDAQ, 14 on the Dow, and 2. They haven't moved at all, 5.15 on Friday, so these are still reflecting the problems at the Globex. All right, so let's just type in PSMI. When your pop-up blockers don't block it, so what does it say? So it's something about a merger. Don't need to spend any more time than that. I'm not interested. You can see the huge volume. Force has price change and volume. And when you see this much of a volume and that much price range, no surprise, it brings it to the top. International Rectifier had a huge move as well. Again, you really wonder what's going on. Maybe they're the ones that are buying them for all I know. Let's just take a quick look. I know there was some comment about somebody that was looking to make a big acquisition in semis. Infineon to buy International Rectifier. Okay, so I guess this group is probably elevated by mergers. Himax had an upgrade. Himax used to be a big play on Google Glass. I have Google Glass. It's no big deal. And you could see it's had a hard sell-off. Now, is it put in the bottom? Will it run back up to 10? I think it might. It's another 20% from here. I would expect you to have a lot of resistance over here. And there's a lot of people to the left that are waiting to sell their shares. I'm not a big fan of Himax. NXP, different story. More shallow pullback, good earnings per share growth, broke above the 50. I would find that one much more interesting. Let's add all my goodies. And not a whole lot to say there. We'll stop at Intel. Keep going. Intel, pull back like the market on Friday, been a big leader. Not my favorite. Marvell, in a pullback back up to the 50, a couple of pocket pivots, good on balance volume coming into the stock. That looks interesting, but I don't like things below the 200-day moving average. And Micron had a bit of a pullback. I think Micron's getting ready to run again. Still has some good earnings coming into the stock. So 2 acquisitions and still a lot of other strength within semiconductor devices. Right click, now go to Internet Space, change index group. I mentioned LinkedIn looked a lot like the dollar. I don't know of any other relationship between the two, so that's not. But doesn't this just look like the dollar? Broke above the 200. and wants to go again. Everything is green. It had pocket pivots on Friday. It makes no money or makes minimal money in a high multiple, but I use it, and so does every out-of-work professional that I know of. So maybe there's a big market there, and maybe you look at Salesforce doing well. Maybe this will continue to do well despite lack of earnings. TripAdvisor kind of looks the same chart, breaking above the 50. Kahuna's pocket pivots, on balance volume turning up. That looks kind of interesting. Auto Home, don't know this one from Adam. I think it's a Chinese auto retailer, internet retailer. It's a IPO. Great on balance volume. Had a Kahuna on Friday and a mobile breakout. Everything is green. Pulled back to the 17. Looks like it wants to run here. Don't know this guy. But boy, a lot of pocket pivots and a Kahuna. Mobile breakout and a Bible gap up. The stock is called Cunard Cayman Islands. Doesn't make any money. There's got to be something going on with this stock. But I'm not going to take the time now to figure out. Search-based commerce in China for travel. Also looks like it was an IPO within the last year. But boy, look at all these pocket pivots coming into the stock. Next group down, I right-click, back, group number 3, which is group number 4, because I forgot to take out major industries. Banks, as I said, they look strong. Bank of America settled for billions of dollars, some their fault, some acquired companies' fault, and broke above its 200-day moving average. Had Kahuna's pocket pivots, mostly green up here. Wouldn't surprise me to see it get back up to the 18 range. I've also had some Wells Fargo, which pulled back and is right at the 50 right now. There are a lot of banks that I saw when I went through my analysis. Citi was at the 50 last week, then broke above the 200. Don't like how it closed on Friday, sort of a shooting star. So banks make it up on the list of top 10. The next one down, communications equipment. So you got Apple, among others. Apple's a star right now. iPhone 6 coming, I'll get mine. My wife will get hers, and I'm sure a lot of other people will get them as well. Everything is green, breaking out to multi-year highs, I think all-time highs, multiple pocket pivots, strong on balance volume, not overextended necessarily at this point. Apple looks great. I don't love its slowing earnings per share growth, but I think there's a lot of stories within one company, and Apple right now is hot. Brocade, don't know anything about Brocade right now. It's got intermittent, has some earnings growth, but you got to like this, where it had a Darvis box going back for about 3 months, gapped up on Friday with the Kahuna PSAR reversal the day before. Might be interested in figuring out what's going on there. So I basically go through the top 10 groups, and I'll continue the top 10 because I use this as well. I mentioned close. Here's 3 in a row, 4 in a row that I already mentioned. Ross Stores, big gap up on Friday. I wonder if Lou Power's wife still owns this one. Had been in a kind of a funk. Now the funk being sideways for 2 years, not horrible funk. In fact, quite bullish looking as far as I'm concerned. Never really got close to the 200-day moving average. You can see why I like the bongos. They're the periods of the sell-offs. They go red. Went red at the peak on the weekly. I guess one would be the monthly, one would be the weekly now. And they've all gone green. So Ross Stores, I don't totally understand the fundamentals. Don't see a lot of growth here, but does make a lot of money. Looks extremely good right now. Pays a dividend 1.1%. I mentioned the gap, multiple. He had a gap up here, gap up here. Lots of pocket pivots in Kahunas. Gap is on a move. And again, the gap has done nothing for a long time as well. this will be a pivotal high down here, which is going to get close from back from August of 2013 on the weekly chart. Next one's probably the American Eagle Outfitters. Why did I buy it? I bought it because it broke up above the 8-day and above the 50 with a PSAR reversal, pocket pivots and kahunas, and great on-balance volume. I should have bought the other two, but this one percentage-wise has had a nice move as well. And lastly, TJX got above its 50 as well. So retail is strong, not just seasonality, but on these stocks that I've reviewed. Plenty more. That's why you have the program. Go through, pick your poison, look at the charts. Information services. Don't really get this company. I've owned it a long time ago. 5-day return of 131%. So a lot of people are excited about China Finance Online. I have no idea. It's kind of a momentum story right now. Let's go to a monthly, because it was a big player back here in 07, and it's got a long ways to go to get back there, but you could see the strength of the group is strong, and the stock had a major move this week, right up at the high jump line, multiple Bible gap ups. Interesting picture. Not sure what I would do with it. It's driving the group. Try to pick it up a little bit. I got about 10 more minutes before my dog's going to say, take me for a walk. Renewable energy, bunch of solar stocks. Back in my January meeting, I commented on some of the earnings growth going forward of some of these stocks. And GTAT, it's a renewable energy stock, but they also, I think, make the screen, the sapphire screen for the i6. So, I look at this, I don't get that excited. It was a nice move off the bottom of 30%. It's above the 8-day, had a mobile breakout. Not that excited. Solar City, another momentum play going sideways, sitting on top of the 50. Momentum coming in here could excite me. Doesn't make money yet. That bothers me. JK Solar just breaking right above the 200-day, which has been resistance for a while. Like to see it push off of this, get me more interested. Makes money, slowing perhaps earnings per share growth, but makes a lot of money and trades at a multiple of 7.9, and the next quarter growth being 40 times. Canadian Solar, talk about earnings per share growth. Look at the huge earnings per share in this stock, and we talked about this one in June, and it's finally starting to move. So solar looks like it's heated up nicely. I hope the run's not over because I still own some of them. Steel producers talking about a run. I think they got an accelerant on Friday where some anti-dumping things ruled in their favor. But U.S. Steel has been a big mover for weeks. It's funny, we did a scan in May. And it was in the weeks before my June meeting. And I was kind of surprised because I did some settings differently in HGSI. And steel producers came to the top, which made no sense because they were doing nothing. Now I got to figure out what I was doing because maybe I've got a good barometer of the future, because steel broke out in July, had a pullback, 3-day pullback until Friday where it had a pocket pivot, mobile breakout. Everything's green. U.S. Steel continues to look great, as does AK Steel. Multi-year highs on kahunas. Everything's green. Great earnings per share growth. Jesse Stein has been calling this stock for over a year. And as you could see, it was really dead for a couple of years until recently. Continuing in on what groups are working in the top 10. The next one in the top 10 is department stores. Boy, they showed up all over the place. Macys, 7.5% over 5 days. Bonton, 25%. Again, nice period of basing action. Has now broke out above its highs going back quite some time. Not sure if these are, I don't think these are all-time highs, but let's just put a monthly chart on. Up, going back to 2005, these are all-time highs on Macys. Eventually, this will roll over with the rest of the market, but this is breaking out again. Everything is green. It makes money. What a beautiful chart. And it was basing for 5 months. So this looks great. That's Macys. Less impressed with Bonton. Again, play into the retail side. On Thursday, mobile breakout from a squeeze. A kahuna, good volume on Friday as well. If it gets above the 200, be interesting to see where it goes. It gets huge earnings, I guess, in the Christmas season. I don't get it, but it's got $3.26, 2 quarters out with great earnings per share growth. It'll be interesting to see where this stock can go. Not a big fan because I don't know it. I know that John Person has been talking a lot about Kohls. Started about 2-3 weeks ago, and you could see why. And he, if you go back 3 weeks ago, he was catching it when it was breaking out here. I should have paid more attention. I can't buy everything he tells me he's buying. I wish I would have bought this one. Big move on Kohls. Again, retail is strong right now. Maybe it's too late. My seasonality analysis says that we might have a few more weeks left. And I'll finish on application software, and then we'll do a couple of other things. And this is going to be led by Salesforce, who surprised me, although I didn't have any position on, and really outperformed on its earnings. And it's kind of now taken out multi-month highs. Be interested to see if it can get back up to 67. My guess it will. Pocket pivots, kahunas, everything is green. Bible gap up. Salesforce looks remarkably good. At this point, I usually just do a quick gander. What else is here? Biotech, specialty pharmaceuticals. A couple of these, I just want to go through a couple of them. This is kind of the stuff that I know the most. Gilead, where does Gilead stop? God only knows. Eventually, you're not going to be able to grow your earnings 300% per quarter. This is a box 0.00001. If box 1 is the best and the smaller the number is the best you can get. Huge growth rates. But at some point, this company is making $8 to $12 a share, if not more. Even if it trades at a multiple of 15, it's $120 to $180 stock. I think it continues to go. It's going to take an act of Congress to change how we pay for medications in this country. And there's current law on the books that says Congress cannot negotiate drug prices. A lot can happen before any powers come to bear on pricing of drugs in this country. Intercept, I got lucky on this pop here, as I said, up to about 360. I had started talking about it on these calls back here. I think it's time to look at this again. This is expensive. The calls are expensive. The market cap is $6 billion, so it's not cheap. It was $2.5 billion in December. Its market potential is so big that this, I still think, is a $10 billion takeover when it gets a little bit more data. Its data is strong, even and what's his name? Fine Paper. One of the bloggers that's pretty rough on pharma actually was very positive on their data. Echelon, another play on hepatitis C. They have a drug that you'll take with the Gilead's drug. Currently long that one as well. Clovis, I'm not long, but I'm interested in. I like this pullback to the 50. It's very constructive. My on-balance volume is staying above the moving average, pulling back to the 50. I know their leadership. They're very strong. The CEO has flipped positively for shareholders a number of prior companies. I'll be keeping a close eye on Clovis Oncology. I mentioned Intermune. Let's see if there's any signals this week. This is where somewhere in these couple of days is when it was first announced that there was going to be a potential takeover and where I went long on the stock. Mobile breakout from a squeeze, a kahuna, and I'm always having long on the calls. So I think the selling price is $73 per share, 8.3 billion. And the funny thing is you already got shareholder lawsuits, they didn't get enough money. So that'll be interesting to see that happens there. To the downside, to see what groups are not behaving, I look at 2D EMA down and precious metals, integrated oils, automobile OEMs, or, that's interesting, don't have a whole lot of time to go through these, casinos, pharmacies, tobacco, auto parts. Now, interestingly, there's a lot of midstream stocks that look good on my top-down, on my bottoms-up review, but as a whole, midstream made it to the 2DMA down list. What I usually do at this point is I run my group inclusion filter report and I take a look at those stocks. Now, Ron Brown, who is one of the reasons why you really ought to go to the PV meeting, the other reason being Ian Woodward. Ron has done some recent videos and he showed how he automates the group inclusion process on a nightly basis. And I basically follow what he does, and this is kind of things that I do every night. And I will go, let me get it, I had to resize. So I have all my favorite smart groups in here, and I can do my group inclusion report. Top picks, and then I'm gonna, again, I gotta size everything. Check index groups. It's going to tell me I got 25 or 26 groups. There you go. I want to make a group from the report. Let's just call this online video GIF 8.24. Top 30, I'm going to hit OK. In a second, it's going to ask me if I want an index. First, it wants me to put this. And then if I want an index, I'm going to say no. Here's my top 30. Let's take a quick look-see at those. And then I'm going to call it a night. This is a very quick process that I run every night, and I go through each of these 30 stocks to find potential buys. Acorn, nice up move. I already own some. Everything is green. Positive on balance volume. I like the railroad track, so the 8 above the 17, above the 50, above the 200. I'm long. I'll continue to be long on Acorn. Bit Auto, I played this earlier. It's like VIPs. I took 2 cents off of a $10 bill. Big run up. Pull back 3 days, a nice day on Friday. This would be a nice spot for it to run again from. Good earnings per share growth to continue. Chinese online auto stock. We already looked at Canadian solar, great earnings per share growth. Solar stock pausing now. Cavium, I believe this is a technology stock. Semiconductor devices, we know they're strong. They were the top rated group. Breaking out to new highs here. Everything is green. Pocket pivot on Friday. Look at that earnings per share growth. Trades at a multiple that's very high though. Cavium, JRJC, China Finance Online, we've already looked at. HGSH, China Holdings. There's something about this that I remember. It's actually got some earnings projected to come into the stock. For some reason, I did something that I probably have to reboot that. So I'll go into MarketSmith on something like this. No, I can't see that either. If you're wondering, it's so small. So this is when I'll go to my other tools. And 46 cents earning in 2013. In a downtrend, big breakout. Look at the volume that came into the stock. I know Ron's been talking about a little bit on HGSI. All the signals are great. Look at this on-balance volume here. Just it's a little stock. I get nervous about these. DTS is a consumer electronic. I think it's a patent troll company. In a pullback, breaking out here. I don't follow this. Mostly green. Nice on-balance volume. eHouse China, basing here for about a month. Multiple pocket pivots, a kahuna, everything's green. Mobile breakout from the squeeze. Strong group strength, makes money. This might be interesting buy point off of the squeeze. Federated National Holding Company, sitting on the 50. Other than that, makes money, not too exciting by my taste. Foot Locker retailer, big gap up on Friday. The shoe guys have been strong for weeks. Skechers, United Armour. There's Gilead, we talked about them. GPRE, like PEIX, have been a leader in the alternative energy. Biofuel group continues to be up strong. Eventually the group will slow down. It's still got great earnings per share growth. Jinx Solar, we looked at this. Liberty Interactive, something about video games going on. Electronic Arts also looks extremely strong. These numbers didn't impress me. What impressed me, and you won't be able to read it because I know it's so small, I apologize for that, LVNTA. I think Liberty Interactive bought up a bunch of assets. $3.30, 2015, 284% growth. If it goes from making no money to $3, don't you, with 300%, 200% growth, don't you think it's worth more than $75? I do. I'm going to be looking at going long in Liberty Interactive this week. LRAD, I don't know. Consumer Electronics, it's a $3 stock. I don't really want to know. I mentioned Micron before. We'll see if it runs again. Netflix, certainly a leader. Expensive, earnings per share slowing down versus international expansion. Here's PEIX, looks like GPRE without the earnings story, although I just think this is an HGSI issue. Here's that Cunard, Cayman Islands, don't know anything about it. IPO. Lots of action to the right. Skechers, I mentioned, shoes on a tear. Skechers is one of them. Southwest Airlines, one of the leading airlines. I'd also look at, well, I guess Save looks good too, and Delta, but I think this looks the best. You see good earnings per share growth on the lower left, upper right. Here's Spirit, SAVE, looks good as well. Targa Resources, this is, I believe, an MLP, and it pays a 4.4%. There's a lot of MLPs that made my list this weekend. White Wave is a takeout candidate on the foods. I believe it's a takeout candidate. Soy products. And then Trinity, refurbishing and creating new rail cars to carry shale oil and gas, lower left, upper right. Again, one of my holdings, lots of pocket pivots this past week. A leader. TripAdvisor, we mentioned it earlier. US Silica, High Crush, and EMES all provide sand for fracking, and you could see how strong this is. My guess is it's still a double from here based upon its earnings projections. Under Armour, this was really what led the apparel retail, and they blamed it on shoes. Big gap up here about a month ago really kicked off the big move for retail. The point of this exercise here, steel again, and then YY, Chinese internet retail play. pull back, looks like a natural place for it to move off again. Great earnings per share growth. The purpose of that is to show you that that simple group inclusion filter tool gave me 30 leaders. Other things that I do as part of getting ready for the week is I look at various scans, mostly within HGSI. I'll go up to all securities and I'll run through my favorites. I'll go to Volume Buzz 5 times. Well, we looked at Peregrine Semis and JRJC and HGSH. Who's this Travel Centers of America? Travel Centers of America are convenience stores at truck stops. Big breakout here. Bible gap up. Had a Bible gap up earlier in the week. This one looks great to me. It makes money with growing earnings per share growth. TA, Travel Centers of America. I'll go down and look at some of my favorite scans here. How about stocks that are sitting on free parking that have forced kahuna? So these are stocks that are hopefully basing and then had something happen on Friday at support. Let's look at Southern Copper. Pull back to the 50, and then on Friday it had a PSAR reversal, a pocket pivot, and a kahuna. That's my buy setup. This is too loose for my taste, but I'm looking for stocks that come down to this, to the 50, and then get some momentum coming into them. So I want uptrends, and we looked at TripAdvisor earlier. I might look at stocks that are imminent on a breakout, and I call them my PSA reversal close at a squeeze. So any of these that I know look good, we'll look at Fossil. It's expensive stock. So I don't like it because it's in a downtrend, but it's in the right group. Look at the industry group for apparel retail. On Friday, it had a kahuna force. It is trading right below the PSAR dot. Mobile breakout from a squeeze, starting to turn green up there. And the reason why I like these is simple. I'm looking for stocks that haven't broken out yet. Bank of Hawaii, sideways. If it takes out that PSAR dot, it might be interesting. So I want stocks that are setting up. Here's Mead Johnson. If it takes out that PSAR dot, everything is green. It's a buy signal. So I'm looking for stocks that have not yet broken out that look interesting. That must be a buyout. And the reason why I like this scan is because, let's go back to Bank of Hawaii. Let's say I think banks are strong. I have a stock that's squeezing that had a pocket pivot on Friday. I'm going to work tomorrow. If this trades up tomorrow, I don't work anymore, so you know that's a lie. But if the stock trades up tomorrow, I want to be in it. So where am I going to put my buy stop? I'm going to put my buy stop right on that PSAR dot. Why? Because if it trades above that PSAR dots, it's going to give me a PSAR reversal buy signal. It's going to give a lot of other people a buy signal and start showing up on other people's screens. If the market is tough tomorrow, it's going to trade down, so my buy stop will not be hit. I can also look at this stock and say, gosh, there's a lot of congestion in this stock. Right here, these moving averages, my goodness, if I just came in, my buy would be at 59, 3% would be about 58, be 57.20, where I can get down to this low close perhaps here. So I've got a strategy. My strategy would say, if Bank of Hawaii trades above this PSAR dot, I'll have a market order, or perhaps I'll set a limit order at where that dot is today. Once that order is triggered, I'll put in a sell stop. So at most, I'm going to risk 3% on this trade. And the key tenets here is it's a squeeze. So it's telling me that it's pulled back to some congestion. It's right underneath the PSAR dot. It hasn't broken out yet. And I'm looking to find stocks with this scan that have not yet broken out that might be in good buy points. Sometimes I find none, sometimes I find a lot. What else do I do? I talk a lot about persons. One of the things I do with person is I take my big buy list that I have, and I do a number of things. I stick my list into TradeStation or into Thinkorswim, and I scan all day long in real time, looking for various indicators that I use within HGSI that we've talked about: mobile breakout squeeze, Bible gap ups, pocket pivots, etc. I also use the scanner function to scan for things end of day. One of the things I scan for and intraday is person buy signal 2, which is daily buy signals at critical areas of support. So I've mentioned banks. Let's take a look at SUSQ with an HGSI. So I'm using scanning in HGSI and EdgeRater and supplementing it with other programs to find potential stocks. SUSQ. So it's basing here on the 50. It had a kahuna on Friday. It's got strong on-balance volume despite its sideways move, so there's a bit of a convergence there. Everything is green up there, and it just broke above the PSAR dot. That's one I might be interested in. I also said banks are strong right now. It's a small bank, pays a 3.5% dividend yield. Very interesting. So this might be something that I want to pay attention to. I also use Genesis, because within Genesis, I can scan my entire universe looking for some of John Person's different signals. And so I might see if SUSQ came up here. Put it down here. And so what I see here is a buy signal on the weekly and on the daily using the John's buy signals. I see on my traditional chart that it's breaking out here. Now, what else do I see on this chart? I see that seasonality is not my friend. So that's concerning. But as John likes to tell me, technicals trump seasonality. And look at the angle of on-balance volume. Going up while price is going down. What do we call that? Well, I used to call that bullish divergence. And John has educated me. He calls that bullish convergence. This is a very bullish looking chart, SUSQ. So I'm using my various tools and integrating them with HGSI, finding great stocks, and then trading them on TradeStation or Thinkorswim. On that note, this has gone on way too long. Jeff Scott signing off. Have a great week. I hope you make money. Hope I make money. And we could see futures are open now and up 12 points on the NASDAQ, a little bit on the Russell. And I'm looking forward to trading my Intermune tomorrow. You all have a great week. We'll see you again next week, but probably not till Monday. And I'm going to talk to George Roberts about doing one of these lives soon. Bye, everybody.